Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a short-term sell-off down to 36.75, but the market was able to retrace pretty much the entire move back up within the overnight session. And we know that overall, over the last several days, the market has been stuck in a range. So our bias heading into the open is going to continue to be neutral, and we're going to have to see how the day develops in real time to determine whether one side ends up becoming more dominant in the RTH session. On the downside, we have pre-market support at 44.25 to 46.25. It marks the low from the last couple of days, and if we can get a breakdown below pre-market support, that would be the first sign that the sellers are really starting to step in, and it would bring the 36.75 to 39.25 zone into play. We will have to see how the market approaches that area to determine whether it's still a good enough long setup, because if we're heading down on broad market weakness and the other markets are really liquidating as well, then it is valid support until broken, but we just have to exercise a little more caution then, because then we might expand the range to the downside and the market could even test 31.75 to 33.75. So it really depends on how weak the situation looks in real time. If it's not extremely weak in the sense that the other markets are still holding up well, or the AD line is not really trending down and the tick is not completely below zero and hitting extremes, then 36.75 to 39.25 marks the recent short-term balance area low, and responsive buyers can technically be active there. On the upside, we have pre-market resistance at 51.75 to 52.75. That is the very short-term launching point where the market started heading lower off of the NFP report. So if we can take that out, that would be the first indication that buyers are really starting to step in. And then from there, if the market can take out 54.75 to 56.75, we'd have a confirmation that the buyers are now becoming more dominant. From there, we can head up into yesterday's high at 61.25, test the 63 to 65 area, and that's still a zone where responsive sellers can be active. Taking that zone out, we don't really have a whole lot of strong resistance until 71.5 and 73 to 75 and 77.75 to 78.75. So as we head higher, in the event that we do head higher, responsive sellers can still be active at 71.5 and pretty much every zone on the way up from there. So again, heading into the open, our short-term bias is going to be neutral. We're going to be watching to see how the day develops in real time. We'll be watching to see whether the market can hold 44.25 to 46.25. We'll keep an eye on the other markets as well. And today might just end up being another balancing type day. But we've had a pretty volatile overnight session. Volume is running above average. So there is potential for some range expansion beyond the overnight session range. But there's just no strong directional bias heading into the open because the market has been so range bound overall, and even the overnight session has been quite range bound. So those are the main ideas heading into the open. Let's see how the market responds to pre-market support and the pre-market resistance and initial resistance area. That will help us establish the intraday bias, and we'll take it from there.